Hello and welcome to At the Forefront FinTech Conversations. I'm Sam Belden, head of content at Forefront Communications. And with me today is Steve Boms. Steve is the executive director of FDATA. Steve, welcome to At the Forefront.
Really happy to be here, Sam.
Happy to have you on. As our regular listeners know, Forefront is a full service marketing, communications, design agency focused on the capital markets and fintech. And we love talking to startups and founders who are building really new and innovative things. But we also love to zoom out and talk about some of the really macro stories that are shaping financial services. And today is one of those conversations. Steve represents FDATA, and FDATA represents companies who are looking to advance consumer permission financial data access with the goal of helping consumers and small businesses control access to data, share it securely with trusted providers. So today we've got a great episode in store of how FDATA does all of that, and more broadly, how open finance policy, standardized APIs, and consumer permissioned data sharing frameworks affect consumers, institutions, and the broader financial landscape. And stay tuned for later in the conversation. We will talk a little bit about how AI and the explosion of capabilities in that world is influencing all of these issues. So, Steve, I know I touched on it a little bit at a high level, but I want to kick it over to you. How would you describe, for our listeners who may not be familiar, FData's mission, what it represents, and why consumer permission data access matters in financial services?
Sam, it is the lifeblood of any financial technology company, any crypto company, any platform that's helping consumers or small businesses transact, manage their finances, invest, save, whatever the case may be. At the core of your business is the ability to access data about that consumer held somewhere else, typically, but not always at a bank, in order to deliver the benefit of your service. So just some examples, right? Think about like a Venmo or a PayPal. You want to send me $20 to cover the lunch that we just had together. In order to do that, Venmo needs to know that you've actually got that 20 bucks in your checking account held at whatever bank you've got so that they can send me that money. Then they need to know when I want to take that money out, having received it from you, put it back in my bank, where to send it. And so one of the first things that you'll see when you sign up for any fintech or any third-party platform is they'll ask you to connect at least one and sometimes more than one of your different accounts at that financial institution. So our mission at FData is to advocate on behalf of the consumer, the small business, to be able to do just that. We represent more than 30 fintechs, data access platforms, and other financial services companies that operate in the US, in Canada. Collectively, they help hundreds of millions of consumers and small businesses access these types of tools to help better manage their finances. That's accounting tools, pay by bank tools, other services. This is what is underpinning all of the competition and innovation that all of us are benefiting from just as consumers or small business owners in our day-to-day life. And it's helping the financial services industry become more low cost, become more competitive, become more vibrant over time. So that's what we spend our time focused on, Sam. And I think the proof is in the pudding with more than 100 million Americans using these services today.
Awesome. Steve, appreciate that overview. I want to take a look sort of at the more personal side of things. I know that you had a varied career. Can you tell us a little bit about your career path and what led you to this world and why you're passionate about these issues?
Yeah, I started my career on Capitol Hill in a public policy role on financial services. And worked on a lot of really interesting issues from a kind of policy perspective while I was there, including things like what became the Credit Card Act or the Dodd-Frank Act. From there, I went to a large financial institution and was responsible for policy issues across the full range of different things that banks care about, right? Capital, liquidity. But what I really found interested me the most was this intersection of technology and financial services. So to kind of paraphrase Van Grusty, not where the puck was, but where the puck was going to be going years in the future. That's kind of what directed the next portion of my career. So from there, I've worked in-house managing global policy for a large open banking platform, and then started FData about 9 years ago. And really it's such an interesting range of issues to kind of be focused on, right? Everything from consumer protection to data privacy to data empowerment to what the future of finance is going to look like and how consumers and small businesses will interact with financial services. Um, we've also been really active, and I've been active in Canada as well. Canada's actually been leapfrogging the US on open banking and open data in the last several years. And what I've found in kind of this journey, whether it's in Canada, the US, or some of the work that I've done in the UK or Europe on behalf of data access issues, is every market is different. Every policy arena is different, but fundamentally the issues are always the same, right? People want to be able to use these tools, these third party tools, if they can give them some type of benefit, some type of service that they want, and they want to be protected when they do it. And so it's been a really fulfilling career.
Awesome. I appreciate that overview. It seems like you've sort of pulled from multiple career stops and created something that is addressing multiple bottlenecks to innovation, and you guys are building towards something that's going to provide a materially better solution for consumers, small businesses alike. So I appreciate that overview. Just looking at sort of the broader landscape of open finance rulemaking, what should firms really understand about what's going on here? The regulations that are in play, where the regulatory conversations are today, especially in terms of data access, competition, innovation. What could you tell us that's really important to take away?
Well, this is an area I mentioned Dodd-Frank in my own career journey a few minutes ago, Sam. This really kickstarted back in 2010 when Congress passed the Dodd-Frank Act. Huge, huge, huge law, had a ton of stuff in it. It was obviously a reaction to the financial crisis of 2007 and 2008. But there is this one section of the Dodd-Frank Act, Section 1033. It's incredibly small. It's not very long. But what it says is that consumers should have the right to access electronically their own financial information. And so it really is the first instance of a data portability right in US law. And what that really kind of formalized was this idea that there are legal requirements, legally enforceable requirements for financial institutions to allow their customers to share their data with third parties. And so for firms, that really means several things, right? For the first part, I mentioned some examples of use cases before: Venmo, PayPal. It means that your customers have a right, a legally binding right, to share access to their bank accounts with you to get the benefit of your service. It also means that you have a very kind of clear and prescribed series of requirements that you, as the third party, need to live under: data privacy, data minimization, data security requirements. And it also means that there's a level playing field, right? It means that in this world where there are regulations and there are rules of the road, the best product wins, right? And the access to the data doesn't become the thing that dictates whether you're a winner or a loser in this marketplace. Having said all of that, Sam, I think we also need to acknowledge that the road has not been a linear one on this issue. This is a law that Congress passed 2010. The Consumer Financial Protection Bureau finalized rules or the regulations implementing that law in 2024. We had a presidential election just a couple weeks after they finalized those rules. And the second Trump administration is now revisiting those rules. So everything I said is true, but I think we also have to acknowledge that there is quite a bit of uncertainty about what the future of that regulation looks like, given that we have a new administration in Washington.
Interesting. Yeah, no, I appreciate the background and then that very pertinent view of what the current state of those regulatory conversations is. I like that phrase that you used. Best product wins, and that's sort of the state of play that everyone wants to have in theory, and then what that looks like, and what people's incentives and how people actually think about what that looks like. I know that can vary tremendously when rubber meets the road. So I appreciate that perspective on sort of where we are today. I know you've touched on it a little bit already, but can you tell us maybe some practical examples of how these open finance considerations can really improve outcomes for consumers? And then curious about the institutional side of that as well. How do financial institutions sort of benefit from all this?
So let's start with the underlying premise that the the average consumer, or maybe not even the average consumer, the overwhelming majority of consumers will never think about standard APIs or open banking, right? This is the analogy that I always use is this is like electricity, right? We all interact with it. I challenge anybody to tell me exactly how the electricity comes from the power plant, makes it to my house, and works in every outlet. But what I do know is that I am a huge beneficiary of that electricity and it fuels the products that I've elected to plug in to that outlet, right? I do know that it is standardized so that whether it's a printer, a computer, a toaster oven, a clock, whatever the case may be, it's the same plug, it's the same outlet, and it works when I plug it in. I know that there's been some kind of testing to make sure that that toaster oven, that printer, that computer isn't going to blow up when I plug it in and my house isn't going to explode. And I know that 99.9% of the time, it's going to work exactly the way that I want it to. And that 1% or less of the time when it doesn't work the way that I want it to, there's a power outage. I've got a phone number and I call and I say, I'm having a problem here. And somebody comes and they fix it, right? That's the analogy that I like with open banking because for the average consumer, they don't think to themselves, oh, this is an API driven tool or, oh, this is an open banking enabled tool. They think about, oh, I can pay by bank instead of having to pay a 3.5% interchange fee if I pay by credit card. They think, oh, I want to split this check for lunch with my friend. Let me just quickly Venmo them $20. They might think, I need to make a budget. And in order to do that, I have to see everything I have and everything I owe in one place. I'm going to sign up for a Rocket Money account so that I can just see that dashboard in one place. They may say, I want to file my taxes. And rather than having to input every statement and disclosure that I got from all my financial institutions or my employer, I'm just going to catch it all digitally because that's a lot easier and I won't accidentally fat finger something. So there are literally hundreds or thousands of different use cases that exist today that all of us in one way or another interact with. And the other interesting thing is it will change over time, right? As you become more mature, as your financial needs change, as your financial position evolves, you may have different needs than you did 10, 15, 20 years ago. Fundamentally, though, the underpinning of all of that is the electricity running into your house, which are the standardized APIs and the rules of the road that dictate the infrastructure for how that's all delivered. And so there's a clear advantage for third parties, right? They get that data consistently. But there's often this kind of misconception that the financial institutions really stand to lose, don't stand to gain. And I would offer to you, I think that it's quite the opposite, right? If you just think about the position in the financial services marketplace of large financial institutions, they've got the existing customer relationships. They've got diverse product offerings. They've got huge resources to spend on tech and infrastructure. And so in a world where they can then say to their customers, like, look, Steve, we think you may have a credit card somewhere else that's not through our institution. We offer credit cards. Why don't you share access to the last 12 months of your credit card data held at another institution? And we'll tell you how much you would have saved or spent more if you had our credit card. And if you like it, great, switch over. We're happy to have you. So this is a win-win in my view. And I actually think financial institutions are maybe even best positioned to take advantage of this.
Interesting. Yeah, no, I think that's a really useful reframe. Appreciate you walking us through those benefits on both sides of the equation. I think obviously anytime that you're talking about the open sharing of data, making sure that that data is moving securely, that there are rules governing that exchange of data, obviously paramount. Tell us a bit about that side of the equation and some of the principles that need to govern things like consent, security. How do you think about all that?
I'd start, Sam, by saying financial services and healthcare are probably the two most strongly regulated industries when it comes to data of any marketplaces in the US or really any country in the world, right? And so that's why financial services is a great place to start this kind of open banking, open finance conversation. Liability rules are already established for many different types of accounts in financial services, not all, but many. And so it's a good foundation upon which to build. But I think the first premise of all of this has to be that the data we're talking about doesn't belong to a bank. It doesn't belong to a fintech, doesn't belong to an aggregator. It belongs to you as the customer of whatever entity you're doing business with. And so at the core, we have to make sure that you are able to understand and then affirmatively direct access to your data. And so there are several principles I think we have to be really strongly cued towards. One is informed consent, right? So explicit, affirmative, clear, conspicuous, transparent, and revocable consent. You deserve the right to know where your data is going and then to change your mind at some point and say, I don't want my data there anymore, right? I'm going to revoke the consent for that data to be shared. You deserve the right to have security, right? And there are, I actually was just testifying on Capitol Hill recently about this. There are very strong data security requirements for all fintechs and banks under an act of Congress called the Gramm-Leach-Bliley Act, which requires things like data encryption, both in transit and at rest. It requires a written information security program. It requires that data is only interacted with under the principle of least privilege. So data security is paramount wherever it sits in the system. And then there does need to be defined roles and liability. So the same way that if you wake up one day and see that $10 is missing from your bank account, and your bank goofed and let somebody withdraw money from your account, the same should also be true if $10 is missing from your Venmo wallet, right? And you didn't actually authorize that withdrawal. And so while we haven't gotten to kind of the perfect state yet on liability in open banking, the CFPB rules that I talked about a little bit earlier set up a lot of those data privacy, data security, data minimization rules in ways that minimize the likelihood that anything could go wrong that would result in financial harm to a consumer.
Steve, does just the explosion of AI powered tools and AI more broadly change how you think about this issue or change some of the considerations here?
It very well could, right? I referenced the Wayne Gretzky "Go where the puck is going, not where the puck is" quote before, right? I mean, clearly AI is where the puck is going, not just in financial services, but across the board, everywhere. And so I absolutely think we need to think about this, right? And we've actually started thinking within FDATA about what does agentic AI mean in financial services? And there's two flavors of that as we think about it. One is AI gives you advice, right? So I log on to ChatGPT or Claude or Gemini or whatever, and I say, look, I want to give you access to my financial accounts. Like, tell me how to save better, or tell me where I should be putting my excess savings so that I can make better returns. And it's one thing if ChatGPT comes back, looks at your data, and says, like, look, here are some strategies for you to consider. There are potential risks there, to be clear, that we have to think about, right? What if it gives you bad information, or what if it's taking more data than it should when you give it access? The thing that I think we really need to be thinking about is what happens when right access is enabled, which is not just it giving you advice having viewed your data. It's then saying, Steve, thanks for giving me access to your brokerage account. I understand you want to save more money. I've went ahead and rebalanced your portfolio so that you're in a more aggressive posture. So now you've got stocks as opposed to ETFs and mutual funds. And what if I didn't actually give it explicit directions to do that? What if I didn't understand that that was what it was going to do based on my directions? So I think there's a lot of things to consider here, right? One is, obviously the liability and data security and privacy application to a completely new set of actors in financial services who haven't historically been involved before. Another is clear consumer consent and what that looks like in the age of AI, which is a lot different than when we were using our phones or computers or telephone agents or going into a bank branch. And then the other is, how do we apportion responsibility for whatever end choice the consumer makes, and who's ultimately left holding the ball when something goes wrong? So the short answer to your question, Sam, is yes. It's absolutely something that we need to think about. I don't know that anybody's got a great answer for this just yet, but I think everybody agrees this is absolutely where the world is going.
Makes a lot of sense. Appreciate that overview. Always, I feel like it's been a long time since I've had a podcast guest where I haven't asked about AI in some way. And to your point, that's because it really is touching every arena, not just of finance, but industries far beyond. So appreciate your perspective there. Steve, I know you said that, based on changes that we've seen in Washington, there are some open questions about the future of open finance and everything that we're seeing here. But I wonder if you could take out your crystal ball for a minute and tell us, what do you see as the biggest remaining questions, the big milestones that may be on the horizon, and just the broader direction of open finance in the U.S. and globally? What can you tell us about what's coming around the corner, what people should be looking out for, and where we're heading.
I'll start with the US, Sam, and then I'll compare that to what we're seeing globally. In the US, I do expect that the regulator, the Consumer Financial Protection Bureau, will at some point this spring publish proposed revisions to that open banking rule that we were talking about before. There are a host of questions that they're considering or reconsidering now that they're revamping the rule. I think at the forefront of those considerations is the question of whether financial institutions should be allowed to charge fees in order to let you share elements of your data with a third party. And our view is that any ability of financial institutions to do so really could harm innovation. It could make third party tools more expensive compared to the tools or products that the banks themselves offer. And it could make it a lot harder for smaller fintechs to scale. But we should have a little bit more insight into what they're thinking within the next, I would say, 6 to 8 weeks or so, if not sooner. Globally, though, it's worth being cognizant of the fact that we are really falling behind from a regulatory perspective. Most other G7 countries and jurisdictions have clear regulations around open banking, data privacy, and data empowerment. Just north of the border in Canada, the Canadian Parliament is about to finish its work on the Consumer Driven Banking Act amendments, which will create not just an open banking system in Canada, but an open finance system in Canada. So it won't just be your banking account information, it'll be your investment information, your retirement information, auto, mortgage, a whole bunch of other accounts. In EU and the UK, we've had open banking and the Second Payment Services Directive for almost 8 years now. And then Australia, several years ago, passed a consumer data right, which isn't just financial services, it's across the board. You've got the right to access and share your data everywhere. And they're working diligently to implement that. So the longer term kind of big picture is we are going into the open data era, right? Where you own your data, whether it's at a bank, at a retailer, social media, wherever. We have to write the rules of the road for that. From a macro perspective, if the US doesn't move towards that world and move in tandem with the rest of the way the world is moving, which is it's your right, it's your data for free, there's a real risk that we will be out of step and out of line with kind of the rest of the large world economies in ways that might make us less competitive at a macro level.
Interesting. Well, Steve, I appreciate your perspective on that and throughout this conversation. I think this has been a really useful primer on open finance, the various considerations that go into it, and where all of this is heading and where the U.S. stacks up against the rest of the world. So I want to thank you for your time, your insights today. For anyone who's looking to learn more about this issue or how FData advocates for it, you could head over to fdata.global. And for a full archive of At the Forefront episodes, you can head over to forefrontcomms.com and hit the news and insights section in the top nav bar. So once again, Steve Boms from FData. Steve, really appreciate your time today. Thanks for joining the show.